Hi, I'm Brian, and today we'll be looking at the ACCA paper P5 March June 2017 past year paper, and we'll be looking at requirement B of question 2. Advice on the extent to which target costing would help pit lane to achieve the financial performance objective set by the shareholders. Now, this is for 12 marks, and they use a very high level verb, advise. So when you approach this question, you need to be prepared with a framework and a good understanding of the target costing topic. So this is my first video in this series, and you can watch the videos which further on answer the question for part B. But this video does not answer the question. We're just going to do a bit of revision on target costing and how to think or apply a framework to a P5 level question. So let's straight up start with the general description. Most importantly, it is a market-focused approach to costing. It's externally focused on things outside the organization, such as the market, demographics, economics, and things like that, externally. It starts by determining a target selling price. Now, you can have many factors which might influence your determination of the price. I've given you 3 over here. And, is externally focused. And when we approach the question, we need to look at things which are external to the company over here. The second thing that we need to look out for is the target profit margin, and this is determined by our overall financial objectives. If you subtract the profit margin from the selling price, you will get the target cost. Now, the difference between the target cost and our expected production cost would be the cost gap. Now, this has to be closed. Closed here means expected cost should equal to target cost in order to achieve the financial objectives which have been set over here. Okay, so how do we apply target costing as a P5 approach? So application, first of all, remember that we use it to direct a customer-centric approach. So when we read the question, we're looking for things which have something to do with the market or the customer. Like, for example, here you have product development team believes this feature, which is an app, and high quality packaging allows it to charge 10% more. So, but the marketing team, however, disagrees. So this is something which is external to the company, nothing to do with cost, is about the market. So that's something important when we consider target costing. We can focus on reducing costs early in the product life cycle when costs are easier to manage. It's much easier to let's say redraw a product and take out parts from it before it has been made, rather than when it's already been in production and then you have to, I got to take out that part. You really need to retool your whole factory. You need to retrain all your staff. That's going to be much more expensive. So basically, when we apply target costing, we're focusing on reducing costs at the design stage, the early research and development stage of the product. So, like for example here, there are quality problems which we expect. They're going to be paid 30% more. There might be other approaches which allow us to reduce costs as far as that is concerned, because production has not yet started. Also, it provides a good foundation to embark on cost-saving measures while maintaining value for customers. Like, for example, you can do value engineering and things like that. Things that you might have heard before from your paper F5. So how do we apply it in the P5 question? So, for example, we are looking for items which might lead to higher costs, which might not bring value to our customer to our customer. So, for example, here, whether we employ highly skilled workers or even robots, the final customer doesn't really care about that. It doesn't add value to them whether it's built by a robot or a human, as long as it works. Or another example would be this term here, which is the use of high quality packaging. Now, earlier here, it says that booster will be sold to installers of solar panels and not directly to consumers. So if you're doing a B2B business, you're selling to another business rather than to a final consumer, then packaging might not be such an important thing because, well, it's not such an important thing. You're selling to a final consumer, like maybe your Apple, you're selling iPhones, then probably packaging is part of the user experience. But if you're selling to a reseller, you might not need to have a beautiful box. Okay, and finally, it coordinates departments while keeping financial objectives in mind. In this scenario, pit lane is launching a new product. It involves marketing, it involves production, it involves research development, involves customer relations. So many different departments are working together. So when we approach target costing, there is a set selling price and there's a set profit margin. So everybody is on the same page. We need to achieve this type of financial coordination. So target costing helps with that. So I'll be using this approach over here, my application 4 bullet points here, in order to develop my answer later in video number 2. Okay, so this is the end of the revision for target costing, and my next video we will talk about how to pick out important data from the question and how to write our answer. Okay, that's all. Thank you very much.